technically got a double bottom here. This was the pullback trade where we had a break and close above structure here. Pulled back into our previous level of structure, held this level. If you remember, this was our first zone, then the end of our zone comes down here. Not the prettiest one in the world, but technically a double bottom here. So this could be your bullish entry. And again, you're looking for something like would have been the end of this red candle right here if you're being conservative. A retest of the lowest part of the highs if you're conservative. Stop loss 75. So conservatively, here's a good risk reward, and then more aggressively, if we were to put this in here, I guess we'll put well, you could look for the top of this level as well, something like this. I'll put in 3. So you have your conservative, your medium, and then your aggressive / your secondary targets, right, for the expansion here. So again, we spoke about this level right up here being our key level. I don't think we had confirmation from our volume, but let's see. Maybe we did. Could be wrong. Yep. Well, we have our spikes up here, so confirming that there's a big old void in this level, which again, we're looking for the voids as kind of like a free traffic area, right? There should be no obstacles in this area. If we break out from this area, we should go to the higher one, right? We can bring in other stuff as well, right? We look at this latest move. We can bring in our Fibonacci from swing low to swing high. You'll have a 127 and a 618 there as well. So again, talking about that aggressive entry. Obviously, if you're a fib trader, you can look at any of these fibs. If you're structure based, again, the lowest part of this structure is going to be that secondary target for you. Again, you can look for some ABCD confluence as well. I know you guys are probably typing that in. So you have an ABCD at the 127. So again, any of these levels, this depending on how aggressive or conservative you are as a trader. 127 is always a decent target one, a 1618. You know, hey, in this situation like this, it may be worth saying, I'm trading from here to here. This is 209 pips, 230 pips. If it's safer to get off here, is it worth the extra 20 pips of profit or whatever it is? I would say you're willing to, I'd be willing to take off here instead of here for a little bit of safety. Again, if you're someone that believes in the power of Fibonacci. So different options there with the New Zealand yen. But yeah, good follow-up from the weekend trading edge video. Good follow-up indeed. And that's the idea, guys. We put these trades on the radar initially. You keep them on your radar, you keep them in your book, your journal, your log, and you come back and revisit them. And when you come back and revisit them, you don't have to do all the work over. You already know what you're looking for. In this case, it's just like, hey, you got your entries. Now let's look for targets, stops, and see if everything lines up. Before you guys leave, make sure you hit that like button. Also, subscribe to the channel. We're doing daily videos here, and a lot of these videos follow up on previous videos that we do. So if you want to stay in the mix, make sure you subscribe. Also, if you're new to trading, I recommend checking out the Trader Coffee Break playlist. There's lots of information on there for newer traders about how to get started and really how to get started the right way, not the quote-unquote internet way. So like, subscribe, and make sure you check out the Trader Coffee Break playlist here on the YouTube channel.